Welcome to Dollars and Cents. Our podcast is designed to provide listeners with financial advice in a language you can understand. Created and hosted by Marc Freedman, President and CEO at Freedman Financial, he discusses timely topics that help individuals and families make smart financial decisions. Count on lots of energy, candid discussion, and a few laughs. And now, here's your host of Dollars and Cents, Marc Freedman of Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. My name is Marc Freedman.
And I'm Christian Karcher.
You are.
Yes.
And
I remembered my cue that time.
That's really good. And we're here to provide you some more financial advice in a language you can understand. Christian, last week we missed you.
Yeah, well, I was not expecting to be out of the office, but I had jury duty.
You did your civic duty.
And I got selected for a jury that was 6 business days instead of just the one, which took up a little bit more time than I had anticipated.
And believe it or not, the business survived.
You guys made it without me.
We survived and it all worked. But we missed you. But we missed you, right?
Yeah, I hope so.
Yeah, we did. So do you want to tell everybody about the case or rather not?
Well, details I won't get into, but it was a civil case instead of a criminal one. I was kind of prepared to try to get myself out of a criminal case. And I was blindsided by the judge when he came in and said, it's a civil case. It was a medical malpractice case where someone was suing a doctor for something that happened during a surgery. And it got me thinking a lot, because I'm a little bit weird like this, about financial planning, and how a decision like this might impact someone's financial plan. Because regardless, both sides are going to be significantly impacted depending on the outcome of the trial.
Both sides meaning the hospital and the patient?
Well, the doctor or the patient.
Or the patient.
Regardless of what the answer was going to impact both of their lives.
So what was going through your head as Director of Financial Planning here at Freedman Financial? What was it that was going through your head that said, this is kind of interesting. Maybe we should share it on this week's podcast?
Well, a big thing that I was thinking about was, in financial planning, we like to think about, investment accounts, the income that people are going to receive in retirement, but very rarely do we think about the contingency planning for what if something catastrophic happens? What if your house burns down? What if someone sues you for a significant amount of money? What protections do you have? What insurances are available, and how are you protecting your own financial situation from a situation like this arising?
Yeah, it's funny. A lot of people tend to think when they think about their future of, I got to put money aside, I got to invest in my 401k, I need to have an emergency fund, and that's all assuming everything goes as planned. But then there are periods of time when things don't go as planned, and that's where insurance plays an important role to fill that gap.
Absolutely.
So tell us a little bit more about what you were thinking about there.
Yeah, well, so it depends on, your profession. Some professions like, the medical profession, or even like the financial profession, where there's professional liability insurance, where you and your employer cover a plan that will protect you and your employer if you get sued for something while you are working. But on a personal level, if someone walks by your home and slips on your walk on an icy day, all of a sudden that becomes a personal liability. They can come and sue you as an individual for not keeping the path in front of your house clean.
And we live in a very litigious society these days.
We absolutely do.
And everybody's looking to make a quick buck. At least that's what you hear about. I've always said to clients, when you're looking to buy homeowners or automobile insurance, or even an umbrella policy, we can get into all those things, what is the right amount? And usually the client will tell us, well, whatever my agent told me I should get. Well, did they ever kind of explain to you what happens in the real world? As I've often found with many people that sell insurance, they know how to sell the idea of insurance, the reason why you need to have automobile or life or long-term care or whatever else the insurance is that you might need to have. But chances are many of those people have never filed a claim for a client. They've only filled out the application. They've gotten paid the commission for the product that they sold them, but never have they run into a situation where, oh my goodness, now somebody did get injured in your car, someone fell in your front walk, someone died, or someone needed to file a disability claim. Do you go back to the agent that sold you that policy, or do you call the claims department at the insurance company? And usually the guy that's doing the selling of insurance wants to have nothing to do with the claim process.
Absolutely, and that is something that we run into a lot, where people come to us and say, can you help me with this? And we say, well, yeah, we can, but have you reached out to the agent? And they said, yeah, they weren't interested, they didn't respond,
Or they're not in the business anymore.
or they're not around.
A lot of insurance salesmen last for a few years, and they tell you, oh, you're going to need this life insurance to help your family in 20 or 30 years. They could be long gone out of the business. So how are you getting a proper guide as to what that protection level should be, whether it's for automobile or homeowners or life insurance? And Christian, maybe you can walk our viewers through some of the things that we think about when we're trying to give clients some guidance as to what's appropriate, what's the type of coverage you should have.
Well, particularly, I'll talk about it through the lens of personal liability coverage.
Okay.
So this would be someone slips and falls on your walk. Generally, a homeowner's policy will have a personal liability coverage broadly of $500,000, $500,000. Almost universally, that's what you see.
All right, so let me stop you there. So someone walks by your front walk, they split their head open. There's blood gushing out of their skull. They need to be rushed off to an ambulance. They're very upset. Certainly the spouse of the person who fell, or the boyfriend, or girlfriend, or family members, they can't believe how negligent you were as a homeowner for not salting your walkway properly. What's the chance that they're going to sue you for just $500,000?
Well, do you know what the most fascinating thing about my jury duty was? I always thought that people would come up with a number. But in the case that I was on the jury for, they said, if you find the doctor negligent and we get to the damages section, we have no guidelines for you. It is up to you, the 14 individuals on the jury, to come to a conclusion on what the appropriate number for mental suffering and anguish, loss of companionship from a spouse. You guys get to determine what that amount is.
And so it could be any amount.
It could be any amount.
And if you said $19 billion, the judge says, all right, I accept that. Now, the attorney could go back and say, well, we need to appeal this.
Yeah, right.
But you could come up with any number you want.
It all is in the hands of those jurors to come up with the number.
So you were in a pretty powerful spot, weren't you?
Absolutely. We didn't get to that point, but the conclusion here for financial planning is that $500,000 enough? And very often what we'll say is we back up, we look at the whole financial picture. You've heard me say that a million times, and say, well, so what assets of yours could someone come after? There are some assets that are protected. Retirement plans are generally protected depending on the state you're in. If you have a homestead declaration on your home, a portion of the equity in your home is protected, so they can't kick you out of your house. In Massachusetts, there's some really old rules on the book. You can have 4 tons of hay, 2 pigs, and 12 sheep. They can't come after those. For those of you who are farmers out there in Massachusetts, but
I've hidden mine.
yeah, well, there you go. But
someone's keeping them for me.
But if you have a net worth that's over and above that, if you have an investment account that says that you might have $1 million in it, that money is not protected. Someone could come after that. And so that's when we look at the liability coverage and say, the $500,000 for your homeowners might not be enough. So you need some additional liability coverage.
But all that extra insurance costs money, doesn't it?
It does, but liability insurance, because of the infrequency with you could potentially get sued, is actually relatively inexpensive. So additional liability coverage comes in the form of what's called an umbrella policy. It's liability coverage that's over and above your homeowner's insurance or your automobile insurance. And so the first $500,000 would get paid by the homeowners, and then let's say the next $1 million would come from the umbrella policy.
So is there any secrets to being able to reduce the costs of your umbrella insurance?
Well, one would be to bundle your insurances together. An umbrella policy covers both things from your automobile policy and your homeowners. If you bring that all under one insurance company, it can be a little bit less expensive and easier to...
So as we've seen people that they want to buy $1 million umbrella policy, maybe we're recommending $1 million or $2 million umbrella policy to them, they oftentimes think, geez, millions of dollars of insurance, that's going to cost me a lot. What have you generally seen an umbrella policy costing for $1 million? Yeah,
for a year it might be $400 or $500. It's relatively inexpensive for what you think it would cost, and it's a great level of protection to protect you from the the catastrophic situation in which you're sued if you don't have that insurance it could really ruin your whole financial plan. And that's the value of insurance. You pay a little bit, hope you never claim on it, but it protects you in those one-off situations.
Yeah, and we often see because one of the things that we do as part of the total financial planning analysis in the office is we want to get a copy of the endorsement page of your homeowners and your automobile policy. And we often see that many people are very underinsured when it comes to their auto policy. And one of the biggest reasons that they are underinsured is because they wanted to keep the premium at an absolute low level. And in order to get that umbrella policy, you need to have a certain level within your automobile policy to be eligible for that umbrella policy. So if you only have $100,000 per accident on your insurance, on your automobile policy, no umbrella policy is coming around to cover the balance. You have to get it up to a certain amount. And you need to work with your agent. You need to talk with your advisors to figure out what is it? How do we create the optimal personal liability protection through your home, through your house, through everything in your life so that you can feel comfortable that you protected yourself, your family, your mortgage, your resources. I mean, it's critically important, but I think it's an item that oftentimes gets overlooked because people say, well, I don't want to pay for insurance. In fact, a great example, as we see, there's this concept of long-term care insurance. Many people are buying long-term care insurance. Many people have had long-term care insurance. Long-term care insurance. Can't even say it. And it provides a wonderful benefit when the time is right if it meets particular criteria. But we had somebody in this past week, they're 89 years old, and they've been buying long-term care insurance, paying for it for some 25 years. And the premium just went up. And they said, maybe it's time to cancel it. Maybe it's time to stop paying it. What do you say to them when we're in that kind of a situation, Christian?
Well, I would back up and say, what was the purpose of this insurance? And it's to protect you in case you need long-term care. And at 89, the likelihood that you're going to need long-term care in the next few years is probably worth paying a little bit more in the premium to make sure you have that coverage in case of all it takes is one slip or fall, and you could really be needing to claim on the policy.
Yeah, because let's remember, long-term care, when you talk about long-term care insurance, many of the policies that are offered today, especially through the state of Massachusetts, offer both home health care protection and long-term or assisted living care protection. And in order to qualify, you need to be unable to perform a series of activities of daily living. And while you may be able to do that now at 89 years old, I mean, take a look at our current president right now. I mean, I don't know what his health situation is, but people have said that they've seen his cognitive impairability diminish, at least from a perspective of people just sitting across from him. And at a certain age, it happens more and more and more rapidly, especially if certain things are coming into play. And it's important to have that coverage. Even if the premium goes up, the amount of money that you would have to lay out for the care that you would need is critical. And as long as you can afford it, and I think that's one of the things that people are trying to do is being able to provide resources to that next generation and not have to have everything sucked up to a nursing home, to a long-term care facility. Having that insurance is very important if you have it. Now, you don't go out at age 85 and buy long-term care insurance, do you?
Well, I don't think anyone would. No insurance company is going to take you on at that age at any reasonable amount of money that you can spend.
But if it's something that you're considering or something that you say it makes sense or you'd even like to explore it, I look at it that between the ages of 55 and 65 are great times to be looking at a policy that could be affordable to you. You don't know. You got to look at the big picture. But that's critically important too. Making sure that your automobile insurance is proper, your homeowner's insurance. If you're younger, a disability policy is critical. Life insurance, whether you have it owned personally or through your employer. And then that long-term care policy can be very important as well. So that kind of wraps up the whole collection of...
Yeah, you hit on all the insurances, all in one go there.
So anything else that you wanted to share with us today, Christian?
No,
See,
I think
I'm catching him off guard. He didn't know we were going to do this.
Well, you caught through all the insurances. I think we've wrapped it up.
And just for people to know, and we're running a little bit long here. When you think about insurance, some people hear about this idea of pensions or annuities and annuitization. Understand all of those things are also attached to insurance. And you might say, how is that possible? Well, perhaps that's a topic for another week. That's enough financial advice in a language you can understand for today. My name is Marc Freedman, and
I'm Christian Karcher.
And if now's the time for you to get serious about your financial planning and investment management needs, we hope you'll give us a call, 978-531-8108. That's 978-531-8108. Or if you'd like to sign up for our free weekly newsletter, more than 7,000 people subscribe to it. It lands in your inbox every Friday for free, 10:30 in the morning, Eastern Standard Time, depending upon where you are in the world. It lands at Eastern Standard Time on Fridays. Go to our website, freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. Go to the bottom of any page, put in your name and your email address, and we'll get you our newsletter. You can learn about our firm, and that's going to do it for us this week. Have a wonderful week, everybody, and we'll be back with more financial advice in a language you can understand next week. Thanks for tuning in to Dollars and Cents. Bye-bye.
During today's Dollars and Cents episode with Freedman Financial, your hosts may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Although the money market fund seeks to preserve the value of your investment at $1 per share, it is possible to lose money by investing in the fund. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC.